For more on finance, we're joined by Rod North, Executive Director of Bourse Communications, here with us in studio. Rod, good morning. Good to see you. Do you agree with Saul Eslake about the extended period that he believes we're entering of below-trend growth?
Yes, I think there's a very good argument for that, based on the fact that the jury's really still out on, the view that the Reserve Bank's going to take on things like the outlook for unemployment in Australia, because the Treasury forecasts are still showing that that's likely to trend up to 6.25%. And it was interesting because, we saw some statistics out yesterday on job ads and so forth, and they're still, trending down as well, which is pretty much indicating that unemployment is probably one of the biggest things we need to worry about in Australia. And I think, I don't know whether it's anecdotal or not, but I keep getting lots of calls from people saying, look, my son's just graduated, he's extended his course for a couple of extra years and he's looking for a job, can I help him? So I think that's pretty much indicating there are lots of people coming out of universities and colleges that are looking for work as well, and it's very hard for them to get that first job. So what I think we really need to see is an economy that sort of builds confidence back into the business sector and the economy generally, and I think the jury's a bit out on that. I think people are a bit concerned about what may be ahead in the May budget. Is it going to be a horror budget? Because the blowout there could be around the 60 billion level. So these are all sort of mitigating factors that I think will leave the door open. But one of the key things I think that I'll be keen to see will be the commentary from this afternoon's meeting, because last time in December, the commentary said that there was a potential for an easing bias to still be in play.
Yes.
So they'll be the sorts of words I'll be looking for to see whether, in fact, that can mean that there's the potential for a rate cut.
Another very closely watched economic indicator is house prices. We've got a latest survey on that. How are they going?
Yes, well, house prices are continuing to trend up, and in particular we saw Melbourne and Sydney rise quite substantially over January. We saw Darwin and Perth, not surprisingly, come off, which is showing some of the effects of the mining and resource boom easing there. But yes, housing prices continue to be driven up. So that is the other aspect that the Reserve Bank is sort of very much weighing up, because we're in a low interest rate environment. But one of the things that is noticeable is you haven't got the sort of massive amounts of people looking to finance mortgages as much as we have seen in the past as well.
And the share market seems to be lacking direction at the moment.
The share market is lacking a lot of direction. I mean, we've had a very average January, and February certainly hasn't started off too well. And, we've got the Dow off quite considerably last night. But amazingly enough, we're expecting very positive jobs numbers in the US on Friday. So it sort of beggars belief a bit that the Dow would have a big drop overnight if we're going to see the potential for the unemployment rate in the US drop below 7% when we get that jobs data on Friday. So I think we've sort of watched this space. But our market today is likely to probably drop about 50 to 60 points, I think, off the back of Wall Street.
Right, good to talk to you. Thank you.
Thank you.